Hey guys, it's Will. So one of the stocks that we watch very closely here is CTM. I don't know if you guys know CTM, but CTM is this growing company that's pretty similar to some defense companies. They recently, if we look at the market that they're in, let's get into the trend and the chart. But when we look at the three things of the markets, the analysis, so the technicals, fundamentals, the news, and the financials, and then what the plan looks like for this stock, I'm really looking forward to sharing this with you because I don't think a lot of investors are really seeing some of the nuances that are taking place in the market today. CTM stock was at 21 cents back here in December. It's now at $1.10 after pushing up to $3 a share. And 17% today is how much it surged. We ended up trading it in our market open session in Stockmate and made about $450 profit. And if you guys want to be there at market open each day, we have a sale in the second link in the description for lifetime access to watch me trade live each day at market open. I would encourage you to check it out. When it comes down to this CTM stock, they recently noted that their operating losses were getting better. So they slashed their operating losses. There's three things I want you guys to look at when it comes to the news. The first thing, what I like about this stock is that I don't see a lot of hype around the stock. 1 month ago, December, 3 days ago, okay, they got a $249 million naval intelligence contract, okay, 3.7 million public offering, but I'm not seeing anything that's like, this is the next big thing, everybody buy this stock. That's good. That means that we're before a lot of the hype of this stock. I love it. You guys know I don't even like watching YouTube videos where everybody's like hyping it up. Look at this, buy this stock. Guys, you're going to miss this. This is the best opportunity of the decade. If you don't get in right now, you're going to retire broke or whatever it is that they say. That's not what I'm saying. And we don't watch those videos. They're pretty much a waste of time. When it comes down to the analysis of the news, there's a couple things to note about CTM. CTM is at a $75 million market cap. So they're very smaller company. They have financials that are promising with a $70 million market cap. Their revenue per quarter is around 11 million there. There's 11 million again, 11 million there, and 11 million again. So they've been very consistent with their revenue. They're up year over year in their net income, 86%, just barely hovering negative there at about 1.2 million. Net profit margins are up 85% year over year. We're seeing improvements. So their financials out of everything are what I like. The thing that we don't like is that they don't have a lot of coverage on them. Even if you're playing value, you're going to want coverage on a stock. The good news about that is that it means that we're going to get in potentially here as we're trading it before a lot of the market catches in. And that's a good place to be. Now, the second thing, when it comes to CTM, it's called Castellum Inc. So you can go ahead and search Castellum Inc. Because they're a company that's in intelligence and data, cybersecurity, mission critical systems, they're going to get many of the contracts in the industry that are related to like Palantir or Big Bear AI, which means that we're going to see them have a lot of opportunities for growth over the next few years based on their market. So their market looks good. If there's any market that would be more safe than others when it comes to government contracts, as we know, there's some reduced spending. They're trying to, cut down on spending. One of the industries that most likely won't see a big cut is defense. And so when you see that they're in that area of expertise, that's good news. Here's the other thing. This is number 3. The dollar amounts of their contract, while it's reflective, they're in this IDIQ Oasis Plus contract where they're basically on demand for the government. They're right there ready to service the government on a 10-year. It's a 10-year performance period with no ceiling value. So they're getting contracts on demand. While they just signed that back in December and they're starting to get real contracts. The good part about this growth and the types of contracts that they're getting is that they are 5 times more than their revenue, 10 times more than their revenue. They were just awarded this $103 million contract to their subsidiary GTMR, And this was for, I believe, Nave Air. And this is essentially a part of their team to achieve crucial mission for special missions. And basically, they are integrating solutions into naval air systems that will streamline and add cutting edge development to their engineering, their manufacturing, their production, their deployment, their operations, software. We're talking about data processing as well as cybersecurity, kind of related here to electronic warfare, which is interesting. When you look at these companies and these contracts, they're much higher than their current valuation. And so when we're looking at intrinsic value, that looks nice. I like to see it. So when it comes to the news and the financials, it looks good. When we look at the chart, you can see it's been on this trend. It did have this big spike to $3, then it sold back down, and it's starting to gain a little bit momentum back. And back over the past few days, we start to see it push up. This resistance here is pretty interesting. This is a resistance level that it struggled to break up above. You see that $120 range? It's been getting rejected. Now, they just signed this contract recently. I think it was today. Was it today? Let's go to the bottom. This $103 million contract, February 28th. It's a 5.5 year contract. Special Missions Management On-Site Services, MOS. That's going to be a huge surplus revenue that they're going to see. The most likely will put their company very positive based on how much they're spending right now. And that type of contract over 5 years already puts them, it's basically an additional $5 million a quarter, which is good because they're just a $70 million market cap. That's going to be a big increase in their revenue. So we're going to see that. They're a small company. They're going to see an increase in their revenue. And if they break out above this $1.20 range, we could see them push up. Let's take a real quick look at Fibonacci. So if you take a look at Fibonacci, you go from the top down to the lowest low and back to where we could see them get to. I would imagine this range up in here, this previous resistance, previous support, could be where we'd see them get to. And so if that's the case, we're going to stretch from that lowest low recently since the big sell-off, and we're going to go to that range, which would be right here. So that would be about $2 right here. And so according to Fibonacci, the best buy range is in this 0.618. You guys see this? So basically around $1.12 up to $1.28. They're below that a little bit. So that's what I'm saying. We need to see them break out above this resistance, validate this resistance as a support, as previous resistance oftentimes does act as a support. And if it does, then this golden ratio, where it is above $1.12, would be a good buy territory. Now, if you're buying in that $1.12 range, you'd be looking for margin of profit. If things go well, you're seeing this level, this purple level, about 15%. If things go really well, potentially 25%. And if things go really well and we see it get up to these previous levels that it was just back at in January, then we would see profits of about 70%. So 70%, again, if you invest $1,000, you're making $700. If you invest $100,000, you're making $70,000. It's a big percentage increase. There's also risk that's involved with this stock. Again, it's very small market cap. While they got a great contract and they're getting contracts, we haven't seen any big names, for example. We see them with naval. We see them, I think, Army it was, or Marines. But we want to see them get big contracts and also maybe get some more commercial contracts with some companies that are more notable even outside of the U.S. That would be good too. So again, if they get to previous highs, it's about 160% increase. Quite the potential. Now, it's important not to get the wrong exit on this one wrong entry, because when it comes down to trading these stocks, there's a lot of risk involved in the first few moves above this resistance. Because as we know, I'm going to just remove these drawings here. This swing, it could get rejected. And if it does, it could sell down to under $1. It's quite possible. as that's what's been happening. It's been getting rejected. So we'll have to watch closely at market open on Monday. If you guys would like to be there, see the entries and exits that we make each day at market open, take some of the guessing out of it, and watch us trade live and surround yourself with other traders and investors, I would encourage you to simply take a look at StockMate. It's the second link in the description. Not only do you get the live sessions, you get the lesson library where you can learn stocks, fundamentals, technicals, the analysis that we went through today, you can do for yourself. You can also get a free t-shirt when you enroll in lifetime access. So thank you guys so much for watching. If you earned your thumbs up, hit that like button. Do consider subscribing, and I'll see you guys in the next video. Take care.